What do you make of Jackson Hole this week? Is there market risk to it? Do you feel like something may come out of this that could change the perception of the market? Again, we hit new highs last week. We had a winning week last week.
Well, I think that it's all going to be up to Jerome Powell. He will speak at 10 a.m. on Friday. And the question is, will he be a dove, a hawk, or an owl? An owl just kind of sits there and watches. And I think he's going to be an owl. I think he's going to say the Fed is still data dependent. There's still a couple of very important numbers that'll come out before the meeting on the FOMC meeting on September 16th, 17th, namely the personal consumption expenditure deflator inflation rate will probably be a little bit on the hot side at the end of this month. And then before the meeting, we'll have a CPI number, which also could be on the hot side. And then the big number will be the payroll employment number for August, and I think it's going to be something around 100,000, which I think the market would view as indicative of an improving economy. It was very weak, as you know, in May and June, but then it actually recovered to 73,000. That doesn't seem like much, but it's pretty good compared to what we saw in May and June. Okay. And I think August could be up as well.
All right. So, I mean, there's still a lot of data points left, is what you're basically saying. You think Jay Powell is going to be an owl. So with that in mind, your pick for us today is the SPY. And I thought this was pretty interesting. It's obviously very dominated by some of those Mag 7 names. Why is this a great time to invest in the S&P 500?
Well, there's the Magnificent Seven in the S&P 500, and then there's the S&P 493. And maybe it's time for some of them to be a little bit more magnificent. I think the market is broadening out. And if that's the case, I think it's broadening out to the 493. It may also be broadening out to the SMID caps, the S&P 400 and 600. But look, with regards to the stock market, I tend to be in the same camp as people like Warren Buffett and Professor Siegel. I think you hold them for the long run. You want to make sure that you get the dividends and reinvest the dividends. And I've got the S&P 500 getting to 10,000 by the end of the decade, which I think we'll look back and say that it was the roaring 2020s, kind of similar to the roaring 1920s.
So, Ed, let's get to this. Let's get to your word of the day, because it's kind of related to this thesis. And I also want to ask, then, why are you saying the SPY? Why not the equal weight? If you look over the last week, the equal weight's actually outperforming the market cap weighted index. So if you think the market is broadening out, why not invest there?
I think on a short-term basis, that makes a lot of sense, Frank. And I think that on a longer-term basis, I still want to be in the SPY with the market cap weights.
But isn't that like indirectly a bet on mega cap tech and the fact that mega cap tech's not only going to see price appreciation when it comes to the stocks, but also drive the earnings growth?
Yeah, I'm a big believer, as I said, in the roaring 2020s. I think that technology is boosting productivity. We're seeing that happening with AI, but lots of other technologies are also boosting productivity. And so I think technology, communication services continue to lead the way. Look, when all is said and done, it may very well be we'll look back and say, you know, most companies are technology companies in the sense that they're using technology to increase productivity.
Before we let you go, very quick, your take on the healthcare bounce that we saw month to date. Healthcare actually the best performing sector, driven in large part by UNH and big investors like Appaloosa, Michael Burry buying.
I think there's still an issue with the government being in the face of the healthcare system. Still a lot of pressure on them to lower prices, to increase their productivity, which is a good thing in the long run, but it's expensive in the short run.